allow you to become most profitable. I didn't say profitable, I said most profitable. I want you to nail this. 8 out of 9. 8 out of 10. That's the kind of success rate I want you to have, hit rate. Okay, so let's go over it. The ideal Asian range is 50 pips or less, right? Tokyo channel, for you guys to know what that is. All right, some people are saying they cannot see that. Barbara, can you? There's a slide up there. If you're having technical problems, my slides are up. I know my mic's working. If you're having technical problems, you need to log out, log back in. Make sure you have the latest version of Java. All right? Okay, Ben, good. Thank you, Adam. Thank you. All right. Ideal Asian range, less than 50 pips. If it's bigger than 50 pips, I'll show you how to handle that. The trading zone is set 25 to 50 pips higher or lower than the Asian range. Okay, Jose will talk about it. The Asian range sometimes gets blown out 100, 125 pips. You must then reconsolidate the last quarter to 1/3 of the box and understand the next possible advance or move. How do we do that? Okay. If the Asian range spikes down, the next likely move, if you have a 100, 150 pip news release, the next likely move is at the London Open second leg formation rise. If price spikes up 100 pips plus, depending on the ADR of the pair, the next likely move is stop hunt high drop. Okay? The new guys, I want you to practice in a good Asian range. So what I'm telling you is if you come to your terminal and the Asian range is blown out and you can't see where to reconsolidate it, that's a pass on that currency. Okay? Don't trade that pair if the Asian channel, Tokyo channel is blown out. The setup can occur in the last quarter to just outside the blue box. If the move comes a little bit earlier, and it does, and it will, you are smarter than a blue box. Understand what happened. The move came earlier, the high was formed, they made the second leg, repeat the level, but didn't break it. Understand this, it is still tradable. Okay, am I going too fast? Am I pacing just right? I'm jacked up today. Okay, thank you. Okay, this is what your zone looks like. Now you know we've put the gray boxes in here, but the problem is I want you to learn without the gray boxes. I want you to understand what you're looking at. I don't want you to look at a box and go, yeah, if it hits the box, I take it. That's not what we're doing here. I want you to conceptualize what these guys do and completely understand and immerse yourself in their behaviors, and you'll be able to walk up to a chart at any point in time and take a trade. Okay, so now, the setup occurs in the last 1/3 to 1/4 of this box. Okay, so remember the little story? They set the high and low at 5 p.m. They trade in between the range. They get right before the London session. They open the swing. And then they will make the aggressive move 25 to 50 pips in 3 swipes to form out the stop hunt. They will then pull back and go into contract accumulation mode. Right? Validating all the stuff you read in the textbooks to make you continue short. They will then make the second pass. The second pass can take out the first pass as long as it closes on a pin. If it does not close on a pin, it must railroad track. It must go down, do some damage, and come right back up. Close on a pin is a spike or a hammer bar that looks like that. I'll show you pictures of the bars. Just write down the notes. Close on a pin. Okay, here's what I'm talking about. Let me toggle these and give you a clean slate. Okay, here we go. Market makers set the high and low, trade in between the range, don't allow traders to get out. The last 1/3 to 1/4 of the box, they will widen the swing to pick up the pendings and snag the breakout traders and mess up their week. They will then make 3 moves to the low. And I'm going to cover that in detail today. 1, 2, 3 to the low. They will then pull back quickly and accumulate. This move out of the box, measured from the bottom of the range or the top of the range, must be 25 to 50 pips. If there was a textbook, this is the example that would be in the textbook. Are they going to hit it exactly? No. We know that the pound crosses do 50 pip stop hunts on average. We know Australian and Canadian does 20 to 25 pips on average, as high as 30. If you guys don't bite, they'll run it to 50. I'm going to cover this, but I want you to understand it and hear it. Okay? Think about every textbook you ever read. Where do you put your stop? 7 to 10 pips below the entry bar. 25 pips below the entry. 30 pips. 50 max. You think that they haven't read that book or heard this crap? They know exactly where the stops are and located by the retail traders. That's why they knock them out. So simple. Okay? Coke, I think it's kind of funny that you tell me to drink Coke when your name's Coke. I think it's great. Okay, look. So now, they spike the low in 3 swipes. Right out of the box. The distance is measured from the bottom of the box to this level right here. Okay? That's how we measure. If you reconsolidate outside the box, then you must measure from your swing low, to coin a term from my friend Craig, you must reissue the box yourself. Just draw the lines from one swing low to the other swing high. That becomes your range. All right, I'll draw that example in a minute. Market makers will consolidate off of the low. The last leg of the swipe to the low may look like an outside bar. Okay? Now, how do you know it's an outside bar? Because they're consolidating off of the low of the day to trap the traders that are already down there and to validate the textbook technicals to go the wrong way. Okay? That's what's going on. Now, the second pass comes in. Last night, it was ideal because it went right to the same level. And the pin, whoever asked me about the pin, was thrown down there to pick up the orders. Okay? Understand? Immediately, they came out of the zone. That's the formation of your W. You have a lot of things going on here to confirm the trade. As soon as they do the work and trap the traders, they want to create fear, greed, and panic in the market. That's their job. Their job is to keep you stunned and scared. And for 80% of the traders, I'm guessing, I don't know the number, it works. A lot of people say, man, I'm scared of this when I take an order. I'm not sure if it's right. I'm nervous the whole time. I look at my screen every 5 minutes. You are going to learn that when you get this thing right, it's over quick. And you can get on with your day and your life. You'll grab 50 pips in the blink of an eye. 45 minutes to an hour. No more nursing a trade and sitting there all night going, I don't understand why it didn't pay. Anybody remember the scratch out limit? You take an auto stop yourself or you take a self stop? Anybody? Tell me the number. Thank you. 2 hours. Auto scratch out 2 hours. If you are not in substantial profit in 2 hours, scratch out. Why? They're holding the consolidation level to get more contracts. The straddle they were hoping for was not achieved. Okay, let's take that a step further. Gap time's over at the end of the box right here, right? The guy comes in. He tells him, hey, what's up, man? You know what? I got a boatload of traders trapped down there, about 500 million, 50 pips off of the low, Tokyo channel. So what do you want me to do? Go down there and get it. I think we can pick up 500 million on the stop, and it only costs us 100 million to get down there. Okay. That's the target, right? So now, guy comes on, London Open, pick up the breakout traders, widen the swing, get pennies on both sides, drag the market down to 50 pips below the bottom of the channel, hit all the stop-out orders of the long holders, induce people to take the short, drag the breakout traders that lifted their stop against them, snag them in position. Now, I'm down there. I'm expecting to accumulate 500 million at 50 pips below the Asian channel. My numbers didn't work out, man. Something happened. The traders didn't fall for it. I'm only about 250 million right now. My boss is going to be pissed. What's my next move? We know that the stops are triggered in 25 to 50 pip increments. I didn't achieve my target. There goes my freaking bonus this week. What do I got to do? I got to convince you that the direction is short. How do I do that? I hit it again, 25 to 50 pips lower. I'll consolidate for up to 2 hours. If I don't get the numbers that I was assigned or told I need, I can't just come up empty-handed. There's too much money involved for me to come up empty-handed. They're not in the business of coming up empty-handed. So what do? They attack the next level and cut this level 25 to 50 pips lower. Why 25 to 50 pips? Because it'll convince you, number one, that that's the direction. And number two, it'll hit the stop losses of the people that got it right, that were long. Then the same exact behavior will be seen. Usually, if they go over 2 hours and don't move, it becomes a 50-50 proposition. We are not in the 50-50 business. We are in the 8 out of 10, 9 out of 10 business. So what I'm telling you is that if you take a trade and it does not move into profit immediately like last night's setups, your job is to closely monitor the trade for the 2-hour stop clock. Put a timer on, set an alarm clock, whatever you need to do. And if you're -7, +5, scratch yourself out. Because the criteria or the setup has broken down, and I don't want you hanging around for a 50-50 shot. There's going to be times when you say, "Oh, Steve, it went my way." And I'm going to say, yeah, they did. But they could have just as easily went the other way. When they hold this level for more than 2 hours, something else is going on. They don't have the straddle that they needed. They don't have the contract accumulation straddled the way they needed it for it to be profitable for them. So now they got to extend the consolidation. With an extended consolidation usually comes one more swipe at the stops. It could be mild, which would be the third hit down. Right? You get that a lot. You get 3 hits to the low. If it hits the third time down, you're good. The trade's even more solid, it's going to reverse. Here's why. They didn't go down there because they were bored. They went down there for the cash. They grabbed it, got what they needed, and they get out of the zone. After the third hit, you can expect a major move. Okay, write that down. It's not on the slide. If they hit it 3 times, expect a major move. The better trade is if they hit it 3 times and each subsequent swipe is not taken out. Okay, does that make sense? Here's why. Let me just draw on here. They spike it, pull back. They hit it, come near it, miss it. They go on, hit it again, miss it. If this is rising, damn, I lost the slide. If this is rising, okay, that means that lower level shorts are grabbed. Don't let them out. Lower level shorts are grabbed. Don't let them out. Lower level shorts are grabbed. Got everything we need. Lights out. That's what it means. Okay? Now, back to the trading zone. Sorry the slide got wiped out, but I'm going to wipe this out now. Okay. Right, blah, 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 all this stuff. Okay, last quarter to 1/3 of the box. 1, 2, 3 to the low. 1, 2, 3 swipes at the low. It could be in 3 candles. It could be in 1 candle. It could be a railroad track. But when you watch that candle form, it's in 3 pulses. And I'm going to break it down for you how it pulses. Okay? So now, they pull back, they go into accumulation. Got to get my money, that's why I'm here today. They hang around. They push down and do not take out the previous level. That forms the W formation. Your entry is on a close. Confirmed. I'll talk about the variations on the theme in the candle. Your entry is here. The first target is the high of the day. Okay. Think about this for a minute. If the Asian channel is 45 pips, that's 50 pips right there, right? 45. If the stop hunt is 25 to 50 pips, let's just call it 75 pips. I want you to learn how to become a master at grabbing 50 pips in your sleep. Okay? And it can happen. And then the goal is to maximize your time in front of the screen to where you add contracts and you come out with the number of dollars you're looking for. Okay? So now, the trading zone, they come out in 3